And we have our share of technical difficulties, which it wouldn't be a show without. I was going to do an interview today, but I kind of messed it up, and so I'm here on my own. But I still have some things that I'm interested in talking about right now. We see UVXY up a significant amount today compared with the VIX and compared with how much the market is down. We just went to unchanged in the E-minis. Actually, now we're down 2, and UVXY currently trading 1737, up 83 cents, with the VIX up 40 cents. In the term structure today, we are seeing the whole term structure moving upward in a pretty much equal way. So it looks like every month now is right around 1810, except for the front month, which is around 1885, and the second month at 1830. So the whole term structure is moving up. The E-minis has not had that wide of a range today, and therefore the actual realized volatility is sort of coming in for the ES. So I anticipate the term structure to kind of move up and curl. They want to get it back into contango if they can. And the more we kind of either go sideways or up, the more it's going to start to kind of adjust back to being in line. Let's take a look for a second at the term structure. And to do that, I'm going to pull up VIX Central. So here we go. Let's see if I can pull this up for you folks. All right, so here we have the term structure. Thanks to Eli Mintz. I'm still trying to coax him to come on for an interview. We do have some great interviews coming up, by the way. I'm not going to reveal what they are, but I've got some great people scheduled that you've never seen before on the show or even pretty much heard me talk about. So that's very exciting in the next 2 weeks. As we do look at the term structure here, let me see if I can get myself a little bit more out of the way. We see that sort of smiley face structure that Stephen Aniston would talked about before. And but what's noticeable to you? To me, what I notice is that the spot price is pretty darn close to the other prices here. I mean, things are lining up pretty well. Let me try to redo this. There we go. Spot price 18.98 right now. So less than 25 cents off of the front month future. So we've noticed the front month future is kind of sticking real close to that spot price lately. Let's go check out for a second the ProShares website. And the reason I want to do that is to show you a couple things on there. I love to look at the ProShares website because it reminds me of where we are in the monthly cycle as far as expirations, what we're doing as far as daily holdings. So let's pull it up here for a second. Okay, so we still have a bunch of different swaps in here. Somebody gave me a great piece of info onto why they use some of these swaps, and it's that it helps them with their margin requirements. We were all hit with increased margin requirements and several ways that brokerages made it more difficult to trade the VIX recently. Well, that same sort of phenomenon has hit the big players as well. And using swaps, it can make it, swaps are much less regulated than futures, and you can have lower margin requirements to use these swaps. So this is one of the reasons why they're doing this now. Now, it was easier when we just had the two futures to look and see, oh, okay, UVXY is composed of these two futures, and you could see, okay, well, one is like X amount and the other is Y amount, and you could see it slowly move through the month. But it's harder now looking at these swaps because we don't really know what the swaps are composed of. But that being said, we can see here that expiration is on the 21st. And so that gives us 2 weeks and a day until expiration. So with 2 weeks left, the spot doesn't really have to stick that close, or I'm sorry, the front month future doesn't have to follow the spot that closely as it is right now. They don't really need to converge until that expiration date, about 2 weeks from now. So when we see today the movement of all the futures being up, we've got the back month futures up 40 cents, 42 cents, 45 cents. The back month futures up as many points as the actual VIX. That tells me that the whole curve is moving upward. And I see some promise in that as a short vol person, because the higher we can get the back end of the curve, the easier it is overall to get things back in contango. Now, it's an interesting market today because we've got the NASDAQ up, the Dow down, NASDAQ up 19 now, down over 100, 130, and the E-minis down almost unchanged, now down 250. But still, UVXY up 88 cents, which is, a pretty big move for the market being like sort of unchanged. Now, the reason we're getting that move once again, as most of you know, is that UVXY is based on these two futures, and one future is currently up 62 cents, and the other future is up 47 cents. So UVXY should be up a 1.5 times whatever the average price up of those two futures is based on the waiting 30 days out. So with about half a month to go, each future is contributing about 50%. So if you've got one that's 47 cents and the other is 62 cents, kind of right in the middle of there, maybe 55 cents times 1.5 gets you UVXY price. Now there's some tracking, always between 4 and 415, where the closing mark can get a little bit messed up. So, but when you look at, it actually corresponds very well to the VIX right now. A lot of people will always say, oh, well, the VIX is up $1, but UVXY is not up $2 or something like that. Here we have the VIX up 43 cents and UVXY up 86 cents. So up twice as much as the VIX. So this is, UVXY is tracking the VIX well for longs today. Basically, we were down about $1 in UVXY yesterday, and now we're up about $1, so just moving back and forth. Somebody made a great point in one of the forums yesterday, which is basically like, when you think about it logically as far as, well, why does UVXY go back in contango? Well, if it didn't go in contango, then it would make sense to just buy UVXY at any point and just hang out until you get a spike, because you're not really getting penalized for doing that. And true enough, as many longs have realized recently, it has been a situation, especially with us being in backwardation, where the drag to pull UVXY has not really been there. So it's like a free call almost owning UVXY, because it's not decaying very much, and you can kind of just hang out until you get a spike, and then trade out of your long for a profit. So this has really become the long's revenge. For so long last year and in times past, you see all the chat rooms, people cutting on the longs and saying, oh, the longs don't know what they're doing, they're just wasting money, they're playing lottery tickets, and I've done some of that myself. But now you see The longs have had a comeback. I mean, if you look at the chart for UVXY over, let's take it back 180 days here. You can see that it hasn't been, it really hasn't decayed. Sorry, that's not UVXY. Really hasn't decayed a whole lot. Actually, it's still up from 6 months ago. So let's go back a year. Well, let's go back 3 years. 3-year chart looks a little different, of course. And the 3-year chart is kind of what people are looking at when they're talking about long-term shorts. Still, most of the people in the chat rooms and the groups that I'm associated with are long-term shorts. They're just trying to figure out, they're either short now or they're trying to figure out their re-entry, and that has a lot to do with this, what this 3-year graph illustrates. Let's go back to the 1-year graph though, or chart, and we can see the big spike. Now the question, of course, is where does this settle out to in the end? When you know, in the days between, when nothing's really going on, where does this eventually going to settle out to? And right now, I think you can take cues from usually in the term structure, you can take cues from the far out futures. Actually, the far out futures should be a little bit high for where things would shake out to. So if you look at the term structure, you would think that the VIX would be getting, you know, the average would be somewhere around 18, because that's where we are in the term structure right now. But from this chart here of the VIX, it really looks like anyone's guess, doesn't it? I mean, I cut on people all the time for using technical analysis to try to chart UVXY. Maybe it's slightly more valid with the VIX, but you know, this, if you look at the 1-year chart versus the 3-year chart, gives you a little, a really different look there. Obviously, this spike has changed things. A lot of people predicted this was going to happen, but where we go from here is really anyone's guess. We appear to sort of be in the middle of the range if you look at this 3-year chart here. Could it go back to 10? Yeah, it definitely could. But we see it being pretty strong lately. It's not like when nothing's going on, it's just the air is being let out of it. I mean, here we have basically nothing going on. Now E-mini's down, actually unchanged, and still VIX up. You know, when have you seen in the past UVXY up 76 cents with E-minis unchanged? That's a pretty big move. And, you know, to understand it, in my opinion, you go to the term structure. People putting up charts of technical analysis and trying to say they're this bottom or that bottom, I just think that stuff is totally irrelevant as far as tracking the VIX is concerned here. You know, technical analysis, a lot of times people say it comes out of investor psychology. Well, you know, the VIX is so removed from actually what investors are trading. I mean, the majority of money behind where the VIX comes from people buying and selling puts on the SPX, and that's not retail. Usually it's big money managers that are managing money for retail. So, for example, you might have a person who works a normal 9-to-5 job, and they are convinced to start a 401k, and they put money into a 401k. So every X amount of days, like let's say every paycheck, $200 goes in their 401k. So how does this translate to the VIX? Well, person puts money in their 401k. The 401k typically 401ks will nowadays, the ones I've seen will have some sort of mix depending on your years to retirement. So it will maybe take your age, figure out from actuarial charts when you'll be retiring, and then put you in a mixture of stocks and bonds based on a risk depending on when you're retiring. That being more risky, more stocks weighted if you're younger, less stocks and more bonds rated if you're older. So the $200 you put into your 401k, maybe a little bit of that money goes into a S&P 500 fund of some sort. The S&P 500 fund manager buys all these stocks. He wants to collect the dividends. So when the market goes up, he doesn't sell the stocks, but he buys some puts to protect the portfolio. Now, that's probably actually incorrect in the end, because a lot of these passive type plays are not having fund managers that are buying puts. That's a more advanced play, but you still could find yourself in a 401k situation where you're investing in some sort of more actively managed fund where they would be buying puts. So, Mom and Pop America buys has an automatic investment for their 401k, ends up in this fund that somebody's managing. The guy buys puts to protect himself for the downside, and the VIX moves up a little bit. Well, explain to me how the psychology of that of you buying money in your 401k translates into some sort of technical analysis. It's really very far away from it. That's why one of the main reasons I say that technical analysis is not really valid when dealing with VIX products. And I know I have a lot of people that disagree with me with that, and that's fine. But my purpose of stating that here is just to try to help you to understand the way UVXY is trading a little bit better. And I believe the best way to do so is looking at the term structure. Let's go back to the term structure again for a second here. I just got this new microphone, so I can hear in my ears how loud it is. And it is working out a little bit better because sometimes I forget to talk into the microphone, but now I have instant feedback if I'm not doing that. So on VIX Central, just remember that this is delayed by a few minutes. And the reason it's delayed is that it's prohibitively expensive to get live streaming quotes for a website, and but a little bit delayed you can get for relatively cheap, if not for free. So here we see once again the front month future staying within 25 cents of spot. Now that's a pretty tight correlation. And it really feels to me like that future wants to get above spot, and is tracking it pretty closely. We're seeing in backwardation here, according to this chart, by 3%. Now that's a big drag because the 3%, that is per month. So that's not like 3% yearly. That's 3% monthly. So that's a big number, and it is going to affect things, and it is going to tend to pull things to the upside. That was at 6% a little while ago, but it's still it's a big significant number here. And if you're thinking about shorting UVXY, you want to be cognizant of this number here, especially with the leverage going down. There's not going to be as much drag from beta drift from them buying and selling futures, and this is going to be a real factor pulling UVXY upward. So this is why we focus on this so much, and those of us who like to play this from the short side are really, really excited when we go back into contango. The stats are like 85% of the time things are in contango, but that doesn't mean a whole lot. That doesn't mean a whole lot for day-to-day right this second, because it's over a long period of time, and we could stay in this kind of chopping back and forth type stuff for an extended period of time, and we know that. So people, from what I've heard, have been moving their bets. If they're doing short plays via put spreads, they're moving their bets out. They're not shorting through April options. They're maybe thinking about June, but more like September or maybe next year's January options, which most people would refer to as the leaps. And the reason for that is that this stuff could chop around for a while, and there's not a whole ton of pressure right now for UVXY to go down. In fact, there's no pressure for UVXY to go down. It's going to take piecing together a few days of up markets or calm markets. Right now, it seems like we're going to stay like this for some period of time, but we'll just have to see. Anyway, if I want to thank all those people that have come to join the Facebook group. It is not my group. Somebody had to start it, so I started it. And but I want to step back and let other people, put what they want to put into the group. I'd love to have some help if anyone wants to assist me. Thank you, Clinton, for stepping up and administering things with me. If you guys don't know Clinton, he's a great guy, and shout out to him. Thanks, Clinton. I'm going to be appearing on the American Investor Show coming up soon with Sal. I'll provide a link for that, but I interviewed Sal recently, and we're going to be going over some options basics, just the Greeks. We're going to be talking through a couple trades. He basically has his audience is small cap investors, but also just basically basic technical analysis, basic stock trading basics. And so his people want to learn more about options. So I'm going to start coming on there, I think, I don't know how regularly, but to talk about these issues. I'd love to have you join me. And as I said, we've got some great interviews coming up with new people, and so stick with me. I know it's tough out there for you short vol traders. Money isn't free. It seemed like it was free last year. That you just put this position on and make money, but we know that those things don't last, and it's harder than they make you believe right away. There's no free money out there, folks. It's the same thing with these Bitcoin things. They all went straight up for a little period in December. But, I mean, people that think they can just buy something and it's just going to go straight up, these things don't last forever. There's a buyer and a seller in every spot, and there's a winner and a loser in every situation, and it never becomes a situation where everybody's winning. So thanks for joining me today, and I will see you in the next one. And hang in there, short vol traders. Things will come back into line. We will get back into contango, and we will have some fun this year. Thanks for watching, and I'll see you in the next.